Thank you, everybody, for registering for and attending the Kiewit Bonding workshop. I'm Abigail Brown. I own CPM Logistics. We work with Kiewit on many transportation projects, helping support them to increase, their participation levels, as well as get good information out to industry about any obstacles that are keeping you from working on their projects.
Hi, I'm Rebecca Unter. I work with Abigail at CPM Logistics.
Good morning, and thank you for attending. I'm Jessica Biro. I'm the Caltrans District 5 Small Business Manager.
Good morning, everyone. Thank you for being here. I'm Ayana Nobles, the Small Business Program Manager for District 4, Caltrans.
Yes, good morning, everyone. Welcome in. This is Jada Pugh, also from Caltrans District 4, and I'm the Small Business Liaison for our district.
Good morning, this is Jessica Klemencic. I am the Small Business Liaison for Caltrans District 9.
Good morning, my name is Bob Adams. I'm the Small Business Liaison with Caltrans District 10.
Good morning, everyone. My name is Zach Reilly. I'll be presenting and doing the majority of the talking today. I've been with Kiewit for about 15 years. I'm based out of our NorCal district office right here in Fairfield, and excited to present to you guys today and hear from you.
Ralph Salami with Kiewit, and I'm more on the national level, and I'm here to support Zach.
My name is Raja Panaya. I'm with the district office as well, NorCal district office in Fairfield. Work closely with Zach. I'm a contracts manager, also helping with outreach and compliance, DB compliance.
Hi, my name's Julie Bradhurst with Kiewit, estimating manager here at Northern California. And typically you'd see all our outreach solicitations from Kiewit from me for the Northern California area.
Good morning, everybody. So my name again is Bob Adams. I'm the Small Business Liaison with Caltrans District 10. Dennis T. Agar is our director and was going to give opening remarks this morning, but unfortunately had a conflict. So on his behalf, I send his apologies. And I know he would love to be here visiting with you this morning as well, and just giving you his insight. But I will give you just a couple of minutes of just information about our district. And I think making sure that you're able to find opportunities, especially this is a very pertinent workshop. We've been holding a number of different workshops recently, but we have a number of others coming up as well. So today we're going to be going over with Kiewit their bonding program. We've had an estimating workshop not too long ago that was very good, if last week, and we have another one coming up. And we would encourage you to seek out those educational opportunities, especially if you're a new firm looking to find your feet in the contracting realm. You want to make sure that you start off right. By right, I mean, are you certified? Are you certified as a small business or a disabled veteran business enterprise, perhaps a disadvantaged business enterprise, finding opportunities in Caltrans work? And, we have just in District 10, we're an 8-county region, over 3,500 lane miles of roadway that we maintain. And important that we develop partnerships over the long term, that people understand how important it is if you're a small business, a small contractor looking to get your feet wet for your first time, or maybe you've been working as a subcontractor and looking to step your game up a little bit and move up to the next level. It's important you understand all of the labor compliance, all of the, the bonding that's required, from estimating and submitting your bids to primes, best ways to work with primes and really develop and nurture those partnerships over the long term, and how it all works together with Caltrans. And it's all it's a weave. It all comes together between all these different organizations, and you want to make sure that through these educational opportunities, you're able to take your business to the next level. So with that, I just want to welcome you to the workshop. I want to thank Abigail and CPM Logistics. I want to thank all the folks from Kiewit who are here today for their partnership with Caltrans. And thank you for the opportunity for District 10 to step up and give some opening remarks this morning. So Abigail, I'll give it back to you, and good luck in your contracting endeavors. And by the way, if I can, a number of different small business liaisons are here this morning. If we can answer questions, we have a complete list for you. I think we can post that at a link where, if no matter what district you're in throughout the state, you can contact any of our small business liaisons for assistance in certification, to helping you resolve problems, to make sure that we're helping you develop and build your business as you get into contracting with the state of California. So thanks again, Abigail.
All right, Zach, I'm going to turn it over to you.
All right, good morning again. Before we jump into the bonding workshop and get into the details on our subcontractor default insurance program, I want to give you a little bit of a feel for Kiewit in the NorCal district. And what you're seeing up on the screen there is some of our regional, this is not all of it, but Kiewit is divided up into we have different districts, regional offices essentially, that manage work. And this is some of the stuff that's based out of our Fairfield office that we're involved in right now. You can see our headquarters in Fairfield, but we have projects up and down the West Coast. These are some of the bigger ones, not just a smattering of it, but major markets. We do water, transportation, sewage, and solid waste, wind farm here. We're pretty diverse as far as the type of projects we get into, and also pretty involved in the CMGC and progressive design alternatives. That was kind of the up and down the West Coast. And by the way, I have worked in all three of those states. With Kiewit, you do tend to move around sometimes to bigger projects, and I've worked Washington, Oregon, California, Canada, Hawaii, over my 15-year careers, but settled right in here in the Fairfield for the last 5 years, really enjoying this. And this is just a list of some of the projects we have going. It's not inclusive, but you can see we have quite 7 or 8 projects around the Bay Area, and some of what the types of work we have going. I'm actually currently sitting at project number 1, which is right in Fairfield. It's the 1280 crossing. It's a Caltrans District 4 project. We just got started on that one, and I'm actually on that job site today. Give you a little overview about what we're going to talk about today, and really we're going to start with bonding basics. And I'm kind of happy to see that results of that survey with 78% of the people don't have bonding in place. We're going to start with some high level, just an understanding of the bonding side. I think it's important because there's so many of us who I think get into construction because we are builders, and that's what we're good at. We're good at building, but the business side can be a challenge and it can be confusing. So we're going to start at a high level and make sure we all have the same understanding of what bonding is. And then we're going to talk about some of the challenges that we've seen as we've had our older bonding program, and what the challenges with acquiring bonds were, and how that led to us Kiewit implementing this subcontractor default insurance program, or SDI is what we're calling it, that program. Talk about some of the advantages and what that program is, and how it's an advantage over, how it can save you some headache over traditional bond program. And there's some requirements to get into it. Not everyone qualifies. I'd say the majority of people will easily qualify for that bonding program. We'll go into some of those requirements to get into the program and avoid the bonding, and then kind of wrap it up with some upcoming opportunities, work that we have in the pipeline, some local projects we're bidding. And then Raj is going to finish this up and show you how to get in touch with us and how to get registered for Kiewit if you want to get notified of upcoming work. So bonding base, starting at a very high level here. A bond can be required often they're required by clients, by their prime contractor. They'll ask their prime contractor, bids the job. The client will say, hey, I'm going to require you to get a bond. Or if the prime wins a job, he can also require subcontractors and suppliers to get a bond. And what the bond is doing is it's providing some financial backing, which we'll talk about a little bit more, but it's providing financial backing to either the client, or we're going to talk a lot about it in our scenario right now, where I'm the prime contractor and we have subcontractors. That's what we're going to focus on today. And we'll talk about, the bonding requirements that we ask of subs in the past and what this new program is. So, sometimes I get questions when people are just getting into the work about, they're looking through especially for bid and Caltrans works, there's some language in the spec, which I've got there in the middle of the screen. That's section 3.105 is Caltrans' language. This language is about bonding. And a lot of our subs call me and ask, hey, do I have to do this bond? Is this a requirement? And the answer is no. That's a requirement for the prime contractor who bids the work. The prime who wins the job is required to get that. The second level is, does the prime contractor, if you're going to do work for him, require you to get a bond? And that varies by contractor and risk. So we'll talk a little more about that. So really, bonding is it's a binding agreement between three different entities. In the case we're going to talk about today, there's the prime contract. Let's say, for instance, Kiewit wins a contract, right? We win a contract for Caltrans. We may or may not require a bond from a subcontractor. If we did require a bond, this is a hypothetical situation. If we did require a bond, the subcontractor would then have to go out to a surety. And a surety you can kind of think of as like the bank. They're the financial institution that evaluates the subcontractor and provides assurance basically to the prime contractor that, hey, if this subcontractor has something go wrong and can't complete their scope of work, like bows out and just has to walk away, that the surety will have financial responsibility to cover the prime contractor's costs to either find a new sub to do the work, self-perform the work, recover schedule mitigations to do that work. So the surety is essentially a financial institution who also understands construction and can evaluate the subcontractor's ability. Now, depending on that evaluation, that establishes your bond rate. So if you're a high risk subcontractor doing something new for the first time, or maybe it's a risky scope, your bond rate would get elevated. You'd go up. So that's kind of the agreement there between the prime, subcontractor, and surety. Challenges that we found for bonding, particularly for smaller contractors, use our old program. We used to just bond everyone across the board because it mitigates your risk and it makes sure that you got coverage there in case something goes wrong. It can be a lengthy and time-consuming process to get a surety to come into your organization and evaluate your financial. You kind of open your books up and they have to evaluate you and make sure you're there. And that can be a lot of paperwork, which I think we all have enough of, and no one enjoys doing that extra paperwork. So you have to demonstrate some of those things I'm talking about there: financial reserves, cash flow, etc. And then additionally, there's a cost associated with a bond. So they don't just back you for free. They're going to require somebody needs to pay 1, 2, 3% of the bonding rate. So and then what we also found when we're looking at our program, kind of looking at the old program, is it really limits some of our small business participation because they choose not to do. If we're requiring a bond, and we're just blanket, hey, we need bonds, which a lot of contractors can do that, just blanket, hey, when you're getting a bid, we want a bond. It may not be worth the paperwork, or maybe you don't understand the bonding process, or it's just too much of a headache, or it's confusing. And so you may choose not to bid work, or you may turn in a bid without the bond that's been asked for, and then the contractor will look at it and say, hey, I'm kicking this one out because they didn't follow through on the paperwork side and get their bond. And then there's also a cost side of it too. If you have a really high bond rate, it puts you at a competitive disadvantage with a different contractor who's got a low bond rate, somebody very established, let's say, who's got a lot of history.
I'm not sure this is a group that I should be attending. Our team are not contractors. We are, however, providers to Kiewit, very limitedly currently. We are providers of fluid sealing products. We can do as well as engineering. These products are gasket seals, packing, pipe valve fittings, things of that nature. And we are working on your power plant side currently with Kiewit. So this meeting may not apply to my interest. Your thoughts, Zach? Is there any area here for a subcontractor?
I did say subcontractor, but it's subcontractor and supply. So we require bonding for supply of particular materials, particularly permanent materials or anything that we think is a risk. So you may not get it on many jobs, but it just depends on whether that we may ask for it. If you have a very key component to completing the work on time, and we think there's some risk about scheduled delivery or fabrication, custom type stuff, we do. Like on this job I'm on right now, I've probably got 4 or 5 suppliers who would typically bond if we hadn't gone through a different process with them. So this is somewhat applicable, but it's less common to bond suppliers, I would say, than subcontractors, but just depends on the nature. And then it does apply, it doesn't matter which, this is a Kiewit program. Our Kiewit Power group, if you do power, is got the exact same program. This program is across Kiewit. We're one company. So I may have been talking about West Coast and throwing you off there, but it's across Kiewit. So up to you if you want to stick on for a little bit and get some value, maybe see some value in this, and up to you.
All right, let me read Sterling's question. His microphone's not working. He says, of the ones that have bonding in place, who did they use? What's their capacity? I asked because our cash on hand is not too much. And from what I know, there are several factors that bonding companies look at when they are solicited for a bond, money in the bank being one of them.
It's an evaluation of how stable your company is. And that's why it's a challenge if you're just starting out. They want to see expertise and how many jobs have you done and what's your cash flow? Do you have other jobs on the books? And what's your reserves, your cash reserves in case something does go wrong out of the gate? Can you cover it so that the bond doesn't have to kick in? And I think that's why this program is important for this group. That's what we recognized when we started this program, is that, you know, requiring that bond, it put a third party, the surety, in engage them in it, and they evaluate your business, and they would really get into the weeds on that stuff. And what we want to do is, not everyone needs to be bonded just because there's risk in construction, but we want to be able to evaluate that risk with you and work with you to figure out, yeah, you're new, and maybe this is a little bit of one-off, but this is not a huge risk. We can work with this, and we can avoid that increased paperwork and the level of, and the increased cost from the bond. And we can just work internally. Instead of being a three-way agreement, it's a two-way, it's between Kiewit and yourself to evaluate your business and understand the risks. And we want to get the right people building the right work. So that's the point of this program. I don't have an answer for the rest of the group about their financial situations though.
Yes. So what I've noticed is, we've run into a lot of problems with bonding due to risk and the bid quotes are really high in my industry, which is pile driving and drilling. And what I've noticed amongst the many surety companies that I've called is that if you can prove ability through work, that they're more likely to help out. So having some jobs under your belt seems to be key, as far as what I've been told. The financial part of it, they can get through if there's a nice balance.
The foundation work is some of the most risky work, and that's what Lynn specializes in, is foundation work. And it is a tough one to not, everyone wants a bond on the foundation work because it's out of the gate and it's on the critical path. And I was thinking about you, and I was like, this program, it does have some exceptions. We'll talk through some of those, like that we do require some bonds on certain people when we evaluate them, especially critical path. So we started this program just a year and a half, 2 years ago in 2019. And it's kind of looking, and the reason we talked about that a little bit, was, hey, we were requiring a lot of bonds on everyone, and it was starting to limit our participation in some of our estimates. We didn't feel like we're getting the most value out of having everyone. People are getting turned off by it and say, I'm not going to bid that. It's too much work, or it's too much effort. So what it does is it eliminates the bonding requirements for most, and I will caveat that most of our subs and suppliers will go through what the qualifications are here in a little bit. It's managed internally by Kiewit. We talked about that. And the goal is, one of the main goals is to just increase our small business and small contractor participation and ability to bid and participate in our work. Some of the benefits from our program for our subs and our suppliers, we talked about, is we do bond a lot of our suppliers. We used to, at least. There's no bonding requirements for qualifying subs and suppliers. Okay, that's the big thing, right? We don't have to have a bond. It's not an absolute must. There's no cost to any of our subs and suppliers. It's a Kiewit supported program. It's managed internally by Kiewit, and there's no cost to be involved in it. It reduces the effort. There's less paperwork because you're not involved in the surety. You still do have to do some back and forth with Kiewit to kind of help Kiewit understand, what your business is, and there's some back and forth, but it's not the formal process. It's more like phone calls and talk through stuff and make sure we understand each other. And the big one is your bids. Like, if we used to just say, provide your bond, and if you didn't turn it in, we had the bid forms, and you didn't turn it in with a bond rate, we would, you didn't check the boxes, we'd go out, we need to get somebody with a bond, or because we think, hey, that's really high risk, was the old thought. Or you'd get a really high bond rate, and that would make you less competitive than somebody else because, hey, you have to add 4% to your price just to cover your bond. So that's kind of the benefits that this new program will get rid of, and kind of cutting some of that red tape. Next slide. Okay, so usually contractors don't do anything just for somebody else. Everyone likes to say they do, but there's real reasons that you do this. And as Kiewit implemented this, because there's advantages for us too, and our clients. One, there's goals out there that need to be met. And this is an avenue to help us allow open that avenue up and widen that and really achieve those goals and get more of the right people involved. It also ultimately lowers our cost, because if you just blanket bond, across the board, that can be a higher cost than internally managing and not having to involve a surety. If you can internally manage that cost, we can provide a lower ultimate bid on a contract, and that is of course passed along to your clients and gives you more competitive edge. And it kind of talks about this already, but it allows us to internally evaluate subcontractors and suppliers to really understand their business model and understand the risks and decide whether or not a bond is required, instead of just saying, hey, we need to have bonds.
Yes, well, I guess we want to go prime and not carry that strong of capacity, I guess, to obtain the bond that's necessary. So we try to partner maybe with another firm. So it's kind of like a joint venture type of thing. Do you know if one of the companies can obtain the bond, or do both companies have to obtain the bond in that matter? And also, can we just be a joint venture, or does it need to be an actual registered joint venture with the state? I know in the past sometimes people just partner, but now I've been seeing that a lot of bids require joint ventures to actually be legally registered.
That's a good question, and it's getting into the business side of things. I'm going to answer it from the way I see it done mostly is when we have subcontractors, we're going to sign a contract with one business. Joint ventures I see when you're kind of coming together when you are trying to bid work as the prime contractor. And maybe that's what you're asking me, and that depends on the contract model. But if you're going to be a sub to, say, a Kiewit will typically, the joint venture stuff gets messy. It's probably cleaner to have one primary, person as the subcontractor, and they subcontract additional work to the minor JV partner, if you will. And that allows that stronger participant in the JV to go get the bond. You have to kind of pick the right person and say, I think you should get the bond in this one. But we're going to sub work, and I'm not sure about all the details about how the bonding companies would evaluate the sub to a sub side of it. That's beyond my knowledge, but I hope I answered it. That you could, usually we would typically, because we don't want to sign. It gets confusing when you're trying to subcontract work to a joint venture, and they would have to form an official joint venture, which is, hey, we have to be registered in the state as this joint venture. You have to be a business entity. That's a lot of paperwork and a lot of headache to do as a subcontractor. Typically just pick one of the companies to be the prime subcontractor, and they would sub to the other company. And that's a cleaner avenue, because then we can sign a contract with the majority sub.
I guess, this would be kind of like a question for an underwriter, or a bonding, see how they evaluate
joint venture type stuff.
Joint venture, or joint venture type of stuff. Because like I said, a lot of these contracts we find ourselves that we'd love to be the prime, but our just bonding capacity is not there. So we, by hopefully making up for that, maybe we bring in a stronger construction, but we're bringing them in, but then that ends up Are they really a sub? Are they a joint venture? And how does that work in regards to bonding?
I think that if you're trying to do the joint venture to get your name tied to completing a scope of work, I think that's one of the reasons, hey, we don't have the bonding capacity, we don't want to, don't have the bonding capacity, so we need a joint venture with somebody to be a strong team, but have our name in that contract. I know the sureties do look at that, but they really look at experience. And I don't think they look at it from, if you're a sub to somebody else and you do the work and you can show that you did the work in your books there, that will increase your bonding capacity. Just hey, we have dollars coming in, our name may not be on the JV logo or whatever, but if you're doing the work and you're performing the work and you're getting paid to do the work and you can show successful completion of that work, that is always good for increasing your bonding capacity.
My question is, I am a photographer and videographer. We specialize in AEC industries, but for construction, we do wind farms, we do transportation, and lots of construction. So we've never been asked, we've never primed, obviously, but we've also never been asked for bonding. I'm just curious if there was projects with you guys or Caltrans, whether that would be something that was asked of us.
So your scope, I would think, would probably be a lower risk scope to impacting the completion of a project and probably doesn't require bonding very often. I can think of, we have people who fly drones and shoot survey and pictures that we use to manage our work. So those people are out flying and shoot. I don't know if you're using drones to do stuff. Okay, not drones. So we use drone surveying to topo areas, and that person does have that's a little different business model than what you're talking about there. So that's the type of person that I would typically want to understand how good their equipment is and have they successfully performed this, because we're going to be turning in pay quantities or evaluating our work and doing takeoffs based on the information they provided. I think your scope is very low risk, and I would not think that you should be getting asked to bond, at least very often.
Typically, yours is considered a service. You're not providing any permanent material or any labor on site, supplying equipment and labor on site to install something. So you're typically never required to provide a bond. But like Zach alluded to, if you are going to use drone and other kind of stuff, what typically happens is the insurance requirement becomes a little more stringent. You'll have additional insurance requirement that the owner will require and Kiewit will require, because you have got things like the drone, you said FAA regulation needs to be met, so there are special insurance requirements, which we have dealt with before, but never a bond is never required for a service.
Okay, that's helpful, because sometimes we sub a drone op in when the project requires it. So, but that person usually comes to the table. I think that goes back to Maria's question, which is us as the prime, we don't need it because we're offering on the ground service, and then the drone op is a sub of us. So then how does that all interact? But it sounds like that's probably not a question for your team. Thank you for that answer. That's really helpful information.
We're talking about this default insurance program, which is replacing the bonding requirement, but there are some exceptions to the rule. So we want to apply this as much as possible, but we also, there's three primary things we're going to look at. Is your subcontract to Kiewit greater than $50 million? If it is, that's a big subcontract, then that you wouldn't qualify. We're not going to waive it for really high, big dollar work. Subcontractor material supply contracts that are on the critical path, which I was talking to Lim about a little bit. If your scope is something that's on the critical path and it drives the completion of the job, I got a big schedule here behind me. If your activity is up there and it is in red on the job, because if that scope doesn't go well, the whole job pushes out. Those items we can evaluate them, we can look at it. Depends on how it affects the critical path and how difficult it is to figure out to replace it and stuff, but typically that would not qualify for this default insurance program. We would ask you to get a bond. Sub-material contracts with a significant sole source. Somebody who said they were a supplier, and I think it was another Lynn that was on there that asked about, hey, bonding for other suppliers, and she had some adhesive, I believe she said, or something. If you are make a special type of something, a widget that we have to have, and you are the only person who makes it, or it's really hard, it takes a long time to make it, and if you don't make it, it's going to have big impacts on the job, either schedule or big cost. You'll figure out something different to do. That's another one where we would maybe want to not put you into the program. We'd ask for the bond and go the traditional method. So those are the three things that would exempt you from the program, possibly. We could still look at them. You know, so let's say you're not one of those other three things. You're not greater than $50 million. You're not on the critical path, and you don't make a specialized something that you're only the person that makes it. That's a big problem. If you go to the next step, which is getting into the program. And so to get into the program, it's really quite easy. There's one or two things. The first one is going to sound weird to you because I just talked about cutting red tape, but it's to provide a letter from a surety indicating your bond rate. And this is just a letter from them. It's not we're not going to execute a bond, but if you have it like that, there's 20-some% out there that already have sureties set up, right? So they have a relationship. It's easy for them to go get a letter and say, here's my bond rate. We would take that and just file it in our files there, so that we understand as a corporation what risk we have in our subcontractor default insurance plan. It gives us a way of looking globally at what we're doing. It doesn't matter if your bond rate is high, low. We just want to know what we kind of globally have, so we can kind of steer our ship for down the road. We have drafts of this letter that if you're confused about what we would ask for there, we have a draft letter that we can provide to you to make it easy to go get with a surety. But then the majority of the people I'm talking about right now don't have that. They don't have a bonding relationship. They don't have a surety set up. And so they go to the OR, which is basically, if you can't obtain the letter, we can waive that requirement, and we can enroll you in the program by simply filling out a waiver form. And that's basically, you're going to work one-on-one with, say, a project manager and some of the management at Kiewit to understand what your scope is and what the risks are. And we're going to go through a quick little process and fill out a form and waive the requirement for the bond. So this is a security waiver. This is an actual one that I've struck out the names to protect the innocent here, but this is a one that we just executed in October for the job that I'm actually sitting on right now, the 1280 interchange package 2A. And it was permanent fence, and this individual company had about $100,000 worth of work. They're installing fencing, gates, permanent materials. And we just kind of go through and run through this stuff pretty quickly and get a feel for their company. We don't open your books up. We're not asking you to kind of make a decision about the financial strength of your firm. We just kind of guess about where you're at and talk to you about it. And then we go through and check these boxes. You don't have to check them all one way or the other way, but we want to make sure we understand risks about things that are going on with your scope of work. And then project manager, in this one case, myself, the sponsor, and our district manager sign off on it, and you're in the program. There's no cost. There's no reaching out to sureties. There's no bonding requirement. It's kind of going to minimize the paperwork. You see, this was done in probably a very short phone call and moved on. So that's kind of the gist of what the program exclusions are. It said there was a 3 that would kind of kick you out of it. If you pass those 3, which are not hard for most people to get around, then we go through this. Hey, can we get a letter from your surety? If you can't, no big deal. We'll do a waiver form like this and enroll you in the program. And this is that path.
Yeah. So what's the purpose of needing the letter from the surety? Are you using that as a pre-qualification, or are you using the surety's underwriting to support your own?
That's a great question. I knew that because I talked about not needing bonding, but then I asked for a letter from your surety. Can you go back one slide there? What this does is it's just something we can put into, we want to, because we're self-insured, right? So we're managing our own program. We kind of want to know what risks we have on the books by understanding from as much as we can, which we can't get it from everybody. It tells us how much the bond percentage is for the people that we've got enrolled in the program. It gives us a better feel for how much risk we're carrying on the books, so that you can kind of evaluate that year by year and understand from our business standpoint, just hey, how is the program functioning? What risk are we carrying by not requiring bonds on these individual companies? What's their average bond rates? It's really a business side of it analysis that is performed just to understand that. Does that answer your question? But it's not required. It's not a prerequisite to get into the program.
Somebody asked, what are the different types of bonding requirements? And I'm thinking they're asking for performance, payment, and bid bonds.
Yes, so basically there's only 3 types, right? So one is typically from a subcontractor who's providing labor and material and equipment to be installed on site. They're required to provide payment and performance bond. Similarly, we do, as Kiewit being a prime contractor, we provide a payment and performance bond to Caltrans as well. So it flows down from us, from the owner to Kiewit and Kiewit to the sub. Now, suppliers, typically permanent material and equipment that's going to be provided for a contract will require supply bond. So that's only 2 types. Besides that, of course, you got the retention bond, which we are not talking about here. That's just to get, in case the jobs that there are some retention requirements, say 5% need to be retained. We can still waive that if a sub provides the retention bond, and we will not withhold the 5% retention and release that money to the subs on the progress payment. So that's another type of bond. So there's several types, but the main ones are payment performance bond for subcontractors and supply bond for material suppliers.
And just to kind of clarify, because I think bonding can be pretty confusing. I mean, it's a big statement there, but a payment bond basically is ensuring that you are going to pay all of your employees and all of your subcontractors and suppliers. So as a subcontractor to me, if I get a payment bond from you, it means that I don't have to worry about you walking away from the job and all of these other people that used to work for you coming after me and saying, hey, I never got paid. And I was kind of indirectly working for you as the prime. So that's a payment bond, ensures you're gonna pay. Performance bond is all about, just like they sound, it's about, can you perform the work? Are you going to do the job you signed up to do? Are you going to meet the contractual requirements, the spec, provide the right material, the right resources, labor, equipment to get done on time and not impact the job? That's the performance side. And then the other one is that you'll hear a little bit about that we don't see a lot unless you're bidding as a prime, I think, is a bid bond. And the bid bond, they all make sense to me, the payment, performance, and bid. Bid is done for bids, and it basically ensures that you went out and got a bond that you can provide to somebody and say, I promise to honor my quote. And if I don't honor my quote, if I turn in a number and a scope and I say I'm going to do it, it's good for a certain duration. You have the right to take that and go execute it. And if I back out because I have a bad bid and I turn a bad number in, you can call my bond and that'll cover the cost of going to the next person essentially in the bid order to get the price that's real. So those are the 3 that I deal with: payment, performance, and bid bonds. Hopefully that clears up some of the basics on bonding. I should have probably covered in the first few slides.
Okay, yes, my question is I've been approached with doing back bonding by other drilling companies in sharing projects. Are you guys okay with that? Have you heard of it? This is the scenario, is that, there's a large project and I can't do the full scope. So a larger contractor is willing to come in and help with the scope. And help with some of the equipment and et cetera, to make the full entire package work. And so now they want to put this under me since I'm the DBE. They feel that's the most attractive way to go through the process. And then I say, well, okay, whoa, I cannot financially bond this entire project. So they're saying, well, we'll back bond you, and so we can get through this.
I believe that is starting to make sense to me, and it kind of goes almost to the JV question we had before. It sounds like some of the same things going on there, right? We're trying to get the right group together to get the qualifications, and still get your bonding right. I'm not familiar with the term back bonding, but it does sound like something that you could work through, as long as you have, if somebody, and we're trying to get around that bonding side of things in this workshop. We're talking about trying to get around that. But if you did need a bond, and I can get where you're coming from, Lynn, because you're on the foundation side. I think there's ways that you have to get with a surety, I think would be the best thing, and to work with that company ahead of time, like not wait till, because it seems a little bit confusing. So I would get your package together and the surety that's going to understand both companies and your roles, because they're going to want to evaluate the other company, the equipment, because they could step in and help, some, but you're also a DB, so you have to perform certain portions of it. I would get that all ironed out and packaged up ahead of time and make sure that that's not something you're trying to figure out after you win the job and you think you've kind of got a bond, but you told them a bond rate, and then the surety comes back and says, actually, I think your bond rate's not 0.5%, it's 3%, and on a couple $100,000, you're starting to lose. People are losing money, and everyone's upset.
Okay.
I get ahead of that one because it's got the three parties need to get together and make sure that's solid, and you can present it to a contractor and be confident in it. Getting close here on the bonding side. I'm just going to summarize, and I've done this throughout, but our program, the goal is to eliminate the need and the requirement for everyone to bond, and to try and work with individuals to understand your scope and your risk and get you enrolled in our subcontractor supply default insurance sub and supplies default insurance program. It eliminates that paperwork, that we talked about, of having to open your books to a surety and show your financial backing, and we can get around that. It's no cost, so there's not a reason. There's nothing that. Worst case scenario is you didn't qualify for it because you had a $50 million subcontract, you're on the critical path of the job, or you supplied the one specialty item out there, which is not the majority of people by far. So but there's no cost to it, so it doesn't hurt to be enrolled in it. And our goal is to really be able to make it a little easier on people to bid work. We all are busy. Contracting is a tough business. I don't care if you're a big business or a small business. I think it's particularly hard on small businesses, though, where you have limited staffing and resources to go chase these one-off. You don't have a person like a Raja and who can just kind of focus on areas. You wear a lot of hats. And so when there's extra paperwork, if you can't check the boxes, it's maybe just like, there's too much stuff stacking up on me. I'll just pass on that job. I'll go to the next one. So the goal is to eliminate at least one more hurdle to make it a little easier in your day jobs to bid work with us. And I think that's really the majority of the bonding workshop. I do want to talk about some of our upcoming work items that we have in the future, some of our upcoming projects. So future opportunities with us. This is just a smattering. I asked our district to pull together these are probably some of the larger size. They're not showing all the, $50 million, $25 million. These are just some of the big opportunities that are out there. There's a lot of work, and it's primarily, I would say, the stuff that we have shown up here is in the Bay Area is what I think I generally asked them for. So it may not be perfectly applicable. This is not everything that Kiewit's doing. This is just some of the work that we're looking at out of our Fairfield office. And I think it's $13 billion. And this is just a taste of what's out there and what we're looking at and kind of keeping track of. Some of these are a long way down the road, but we start looking at them, years in advance and understanding what the scopes are as a contractor. We need to spend years sometimes figuring out what this is going to be, so we're prepared to bid them when it comes through.
Based on my research, I know California requires a contractor's bond, a qualifying bond of an individual, an LLC, employee worker bond, and then a workers' compensation insurance. When you're referring to the bond that is required from us, or that you guys offer, you're referring to the contractor's bond, is that correct? Or is it the LLC bond? I'm still trying to learn.
That's a separate bond, completely separate from the performance and payment and bid bonds. LaShawn, those are the ones that the California State Licensing Board requires for you for your contractor's license. And it's completely separate from Kiewit or Caltrans or any of the project stuff.
So on the bids, when it says, do you have your bonds? They're not even referring to those bonds. Those, you're saying those are just the standard basic bonds. They're then referring to either payment, performance, or bid.
Yes. Yep.
Okay. Thank you for that clarification.
Yeah, no problem. When you're looking through your bid documents, you know, it'll show you some requirements that Kiewit might have, but they are completely separate from what the state requires for you for your license.
You know, and typically a lot of the subs and suppliers, when you receive solicitation from us, you will see the bid documents may have requirement for bid bond. You are never required to provide a bid bond. The prime contractor is the only one who is required to provide a bid bond to the client. So I get a lot of these questions from subs. Hey, what about bid bond? Bid bond is not required from any subs or suppliers, or truckers, or firms, any firms. It's always from the prime to the client.
Does this program cover all 3 bonds, or actually, I guess now 2 bonds, the performance bond and the payment bond, or is it just the performance bond?
It covers both.
Okay.
Yeah.
Okay.
Yep, it can be applied to both performance and payment bond. Yep. If you get enrolled in the program, that's the goal, is to just get you out of the surety and not have to have you go through that at all. So you're looking at a slide, I kind of showed you that $13 billion, the previous slide of the big jobs. This is some of the current work that we have out there that we're bidding. This changes pretty quickly. I mean, we're going through, you know, a couple different bids a week sometimes. And so this is just a snapshot of what, you know, is on the horizon. I think one of them was just awarded. The Bethany Dams was recently awarded, but the rest of these are kind of just to give you a feel for what we're bidding on a couple week basis. So none of these are even listed on that other list. This is just kind of the run-of-the-mill business stuff.
So what Kiewit, I think many of you are probably familiar with Kiewit, and what we do is we use Smartbidnet, our solicitation tool, and all our jobs, when we send out solicitation, is typically using Smartbidnet. We have typically included all of the subs and supplies in our database, and we'll invite them based on the scopes that they have registered or that typically can perform. So this is what typically you will see when you get solicitation from us. And for the jobs on the previous slide, you probably have received some invitation from Kiewit the last month or so, and it will come from Smartbidnet. Now, if you are not in the Smartbidnet database, you can always send us a company profile to the email address that's shown on the screen, or you can call our Kiewit office in Fairfield and talk to the estimating team, and they will be able to get you registered in Smartbidnet. This is the fastest way of doing it. The reason we need a company profile is because we want to know what sort of scopes that you are capable of doing. That's the reason we need to know, so that we can put you registered under the right NAICS code, because it uses a NAICS code to do that. So it's better to have your company profile with the type of scope and also the radius. Say, example, you only like to do work within the Northern California region, or you want to do work in, say, we work in other states too, like in Portland and Seattle too. So you may say, I want to work in other districts, other states. You can show that information in your profile, and we can register you so that we can set your boundaries on where you will be able to work. And that way we can invite you to the right projects for solicitation.
I'm up here in Washington State, but I'm a former Californian, so I keep tabs on what's going on there. Does this program apply at all to your projects here in Washington State? You've got a significant $1.4 billion project on a light rail system that's being expanded from Seattle south. And I have not in any way received any indication from the local Kiewit people, and I know them all well, that something like this exists for the projects up here.
I can explain to you what Kiewit has in the Portland region. We have actually 2 projects currently in the Portland region that close to about $700 million. And This program, the bonding program, is applicable to those two projects. We are using it right now, and I'm dealing with all the contracts for the project. So I can assure you that the City of Portland BES project, that's the Columbia Boulevard wastewater treatment plant expansion, and also the raw water project in the city of Wilsonville, we are using this program to waive bonds on subs and supplies.
Talking about Seattle particularly. So I was just to make sure we answer the mail on this. This is a Kiewit company project. It's not isolated to regions or to districts. With that said, that sound transit work was, I've got to look at it. We implemented this program in 2019. So if you're talking about, that's a job that's, I believe, probably, it's in construction and it's past the bid, and it may have had a long lead up to bid time. I'm not positive, when that came about. So that project may have been just before the program as far as when it bid. Seems like it should be, but I'm not positive about that. So I apologize for not knowing the details, but I do think you're talking about the Sound Transit Light Rail project in Seattle. Is that? But it is, to answer your question, generally, this is a Kiewit initiative and it can be used by all projects, and it should be, if you're calling somebody and talking about it, if they're asking for a bond, you can talk to them about it and find out. There may be good reasons that they are bonding particular people on particular jobs. Contact information is up there, and you can reach out if you have questions. In this presentation, I believe Abbigail says it's going to be provided, so you can always go back through if you didn't catch something or you want to re-look at it.
What's the best way for these guys, anybody who's attending here, to get potentially like forecasting or project list, something where it would identify where can they focus their efforts to get work with you guys?
So typically, like you said, we showed you a list of the current jobs, and that's how weekly the list will change. And once we have identified a project, we will send out an invitation to bid through Smartbidnet to vendors and suppliers and subs. And that's how it is available. But
I'll just add on to that a little bit. So one of the reasons we have really struggled to provide a concrete list of jobs that we're bidding is because that list changes all the time. As funding changes from a client, what we think is a bid date, it just adds a ton of confusion to people about, we provide a list and then that list is totally different in 2 to 3 weeks, and somebody thinks the bid date is this and that RFP will be out, and we get a lot of confusion in the industry. People thinking they're missing stuff or not getting stuff. So I think the best thing to do is, like Raja said, is to send, if you want to know what we're really going to bid and you want to be included in that, if you sign up for the smartbid.net, we won't implement that until we're like, hey, we're going to bid this job. And so if you give us a company profile and it's big, if you're in SoCal, put in your region in there. Like, I don't want to get notifications for everything that's up and down the West Coast. I want to get within 100 miles of Los Angeles, or you're up in Seattle, go up to Seattle. I want to be within 200 miles, something like that. Identify. And then also the big thing that people won't do is, if you're focused on a scope, put in the scopes of work that you're interested in. Check the boxes on what you want to get solicitation for. So if we're bidding a job and it doesn't have any of your, fence, you do specialty fence, doesn't have any fence in it, you won't get a notification. So you're not getting it bombarded, but you are getting the right jobs. I think that's probably the best way. It's really hard to give lists just because it leads to mass confusion. People are getting really disappointed in us that we changed our mind, or the funding didn't come through on this job, or it's not going to bid now, or all that stuff. It's a lot to keep updated on a market that's changing week to week.
So good morning, everyone. My name is Jada Pugh. I am, again, the Small Business Liaison for Caltrans District 4. We currently cover 9 counties. If you guys aren't in, so we're already pretty much a pretty big district. And then also, just for everyone to know, and this goes for all designated small business liaisons statewide, we provide a variety of different services to you, whether it's certification or any clarification about certain webinars like this, like bonding, especially Bob Adams from District 10. He has a lot of webinars. Jessica Biro as well from District 5. Have a whole list of webinars that we have ready for you guys all the way through the spring. We also have a procurement fair coming up through March and April. We have a third one also coming up as well. And I meant to send, Abby also sends you the links for our mandatory pre-bid meetings that we have coming up. We have 2 coming up in February, one on the 4th and on the 18th. So if any of you are interested, also send, or if Abby can send out my email so you guys can get the links to register and sign up for those mandatory pre-bid meetings. And if you also want to schedule any one-on-ones, I'm completely available for that. And please shoot me an email or call me, either or.
So I just want to say thank you so much to Zach and to Raja and Julie and everybody from the Kiewit team for really coming to the table with a lot of valuable and relevant information about their bonding program. I think a lot of people didn't know that they are so progressively offering, this service to help get more small contractors on their projects. So Zach, thank you. You guys did a wonderful job with this. And thank you to Caltrans, to Bob, Jessica, Jada, Ayana, and everybody else who helped to coordinate this.
Appreciate everybody's time, and I look forward to meeting in person because this is odd talking to a computer screen and looking at little images, and I'm looking forward to a time where we can, be together. I really enjoy meeting people and enjoy understanding what everyone is doing. I know that you guys all have businesses out there, and you're like everybody else. You're working hard and trying to figure it out and making your way. And I look forward to spending time with you guys in person and getting to know you on a personal level. This is odd to see black screens and not be able to establish a relationship and know who somebody is, but this is the best we got right now. So I appreciate everybody getting on, and I appreciate the faces that I do see on here, and I look forward to getting to know you and hopefully working with you in the future. Best of luck and happy Tuesday, and good luck on your endeavors, and have a successful week.